The Dow and S&P 500 rising to record highs Monday on blowout economic data. Well, let's get inside the markets with Hans Olsen. He's Chief Investment Officer at Fiduciary Trust, and he's joining us today from Kennebunk, Maine. Good afternoon.
Hi, Fred. How are you?
Good seeing you again, Hans. Well, we've got services activity data today surging to a record high in March. On top of that, blockbuster jobs report we got on Friday. So, Hans, what does this mean for the outlook for equities? Is it full steam ahead, or is it really time to worry about inflation?
Well, it's right now the wind continues to be at the backs of equity investors. You're right; those jobs numbers on Friday were fantastic. Over 900,000 new jobs created, and unemployment down to 6%. And then the ISM data that was out this morning, very good indeed. Services ISM new highs. And that's particularly important, right, because the service sector was particularly hard hit in the pandemic. And so we're seeing this recovery trade, if you will, continuing to play out in very good form indeed.
Another concern that investors had was taxes at one point. Today, President Biden saying that higher corporate taxes will not harm the U.S. economy. Then we had Treasury Secretary Janet Yellen calling for a global corporate minimum tax. How likely do you think is it that other countries will agree to set a minimum that would help wipe out a U.S. disadvantage?
Yeah, that's an interesting thing. So this call for global income tax on the part of the Treasury Secretary came in a speech today. And it's in truth something that the OECD has been working on. Now, the devil's going to be in the design details, because we're going to have to agree on what the rate is, what the base is, what definitions of income are, and how you prevent certain disincentives from being created as a result of a global tax scheme. So there's a lot to do here before we get to any sort of tax. As far as higher corporate taxes on the economy, I think when you start to tally up, Fred, all these potential taxes that are going to be placed on investors, whether it be higher corporate income taxes alone in the United States, forget for a moment a global tax, the higher domestic tax, then the potential higher taxes on capital gains and income. When you add all this together, you're really talking about taxes that could be somewhere on the order of 65 to 70% on every dollar of profit. So the notion of after-tax returns coming down on equities is very real, and it's something that investors are going to have to start thinking about as this recovery trade matures. When we start, when we get beyond sort of the infection rates coming down and openings, reopenings continuing to happen, perhaps in the second half of the year, and these taxes become closer to realization, I think that's something that investors are going to have to reckon with. That what does this look like, and what are the alternatives?
You said when this inflation trade matures, how much longer do we have on this reflation trade? And would you be in it for now at the expense of, say, for example, tech stocks, which have taken a beating but are coming back strong today?
Yeah, pretty much everything's up today, save for real estate, but everything else is pretty much up during the day. I think this reflation trade, or recovery trade, as I call it, really has some more legs to it, right? So we still are down roughly 8.5 million jobs from where we were this time last year. Furthermore, we've got another rounds of, successive rounds of stimulus coming. Sort of these are tsunami of stimulus coming at us. And then finally, we still haven't seen ultimately sort of the second and third quarter earnings numbers. So I still think we've got a ways to go before we have to worry about the inflation trade kicking in and the reflation trade coming to an end.
Ways to go, meaning like what, until next year, or?
My guess is that we probably have through the third, fourth quarter of this year. So we still have a ways to go.
Okay. And then what should fixed income investors be doing right now? I was looking at your notes and you felt that inflation concerns right now are a bit premature. Both amidst these rising yields, how should they position themselves?
Yeah, if you look back at the first quarter results, equities had a remarkable quarter, up high single digits. Whereas fixed income securities had a notably bad quarter right across the board. And I think this is part of that push and pull of reflation, inflation types of trade. I do think that the bond market is going to be sorely tested here, probably in the second half of the year. We're starting to see flashes of it with difficult treasury auctions on the 7-year. We've had a couple of successive tough auctions there. And I do think the question is, how do we pay for all this extraordinary fiscal stimulus? Who buys the debt and at what price? And I think that'll end up being tested in the second half of the year.
So what should they do with their fixed income investments?
Shorten the duration for sure. This is a time to have shorter duration. If you can get some short duration and a little bit of carry or yield to go with it, so much the better. Mortgages are a great place to be thinking about right now. Some investment grade, although the yield there has gotten a lot less attractive. But mortgage is probably the best place right now.
All right. So shorter durations and playing the reflation trade. Thanks a lot, Hans. Our thanks to Hans Olsen of Fiduciary Trust. I'm Fred Katayama in New York. This is Reuters.